Morning, friends. How you doing? This is Coach Ernie, and this is the morning market analysis for the Zero DTE service. We're here to talk about what our market is all about and what our setups are, what happened over the weekend, what's the major narrative for today, and how it's going to affect our tail risk trades. And of course, the big news is all about what happened over the weekend. All weekend. The world watched as the Iran bombing played out. But by Monday, markets were back to business as usual. Volatility only modestly higher, if at all. Maybe just a teeny bit. Oil's flat, and traders are acting as if the tail risk simply evaporated. It's the classic complacency trap. When everyone's looking away, risk quietly compounds. Tonight, we're digging into invisible edge that emerges when the crowd gets numb. So, how to structure trades for the surprise nobody's pricing, and why the real danger isn't in the headlines, but in the yawns that are following. That's pretty important. So, the biggest risk in markets isn't always the headline event. It's how quickly the crowds decide it doesn't matter. The Iran bombing should have been a macro earthquake, but the market response was polite shrug. VIX ticked up just a bit, but no panic. Oil barely budged, the world exhaled. Even Washington's focus is elsewhere, lost in political theater. But here's where the edge lives. When the consensus is numb, optionality gets cheap. This is the zone where convexity thrives. Deep out of the money structures that cost little and pay off big if the contained event breaks out into real disruption. Right now, the crowd's sleepiness is your invitation, not to predict the next move, but to position for it. Hold tension, size small, structure wide, and let the market's indifference work for you. The risk that no one sees coming is always the one that matters most. And that is the principle behind virtually everything that we do here at Zero DTE, from the Zero DTE trade every day, which is in fact a tail risk strategy. We don't know which way the market's going. We pick a direction, mostly because we believe that trading with the trend is the right way to go. But still, any given day, it's a 50-50 shot. We put shit way out of the money so that we get a 1 to 10 risk to reward ratio. We do that so that we keep our risk super small, but the payoff is potentially big. If it goes against us, we don't manage it. If it goes towards us, most of those trades are small. Those wins are small, and they offset the losses. What really moves the needle is when we get those events that nobody else is planning for, that we're waiting to happen, and those are the things that raise our account. The result is a very, very small drawdown, very tight volatility of our returns, but consistent returns. Consistent upward returns. Very little drawdown, consistent returns. That's what aids in compounding over the long term. Now, that's the Zero DTE. Now, today, I would say that this is more like a 3 to 5 DTE type of event. Anything can happen in the next 5 days, maybe even a little further out. And so now, for whatever reason, those options are cheap because the market shrugging, like, hey, no big deal. I think everybody more or less breathed a sigh of relief that the United States finally, knocked the bully down. And while you have some political theater of others that are, claiming that somehow this is unconstitutional, even though it's perfectly within the constitutional rights of the president to do this, this political theater that is trying to make a bubble up, this is their opportunity because everything else has failed. And the rest of the world is like, yeah, we needed to suppress these guys. They're getting too close to what could be an Armageddon scenario. And of course, now we're waiting for what the aftermath is going to be. Are they going to be stupid enough to to do some sort of retaliation, because that will be the beginning of the end for Iran, their leadership, for sure. It's just an eventuality. I would prefer, I think everybody would prefer them to be rational players and just say, okay, we get it. We're testing to see if you meant what you meant, but apparently you do, and we're willing to play nice. That seems highly unlikely too, because I believe deeply that they are irrational. And so there's the rub. The rest of the world is kind of sitting back thinking, well, maybe they'll see the light. That's your opportunity to put in a cheap convex trade and play this out, see what happens. Now, I don't know what's going to happen. My wife says, hope for the best, expect the worst, take anything in between. That's kind of like exactly the sentiment of a tail risk trader, because we don't know. What I do know is that those big events, those expect the worst type of things, or hope for the best, either side, they pay off big if you can find it to buy those trades at a proper price. Right now, like I'm saying, this complacency is kind of a gift, right? Buy way out of the money trades for practically nothing that pay huge. All right, let's see. Let's do what we came here to do and look at the 0DTE trades this morning. We're always looking at where the VIX is so we can determine our width, where the market's going, what's the direction. Again, we do that just to trade with the trend. The trend is generally up, so that's definitely going to be a bullish bias. And then where market structure is, that's where we're looking for our daily entry event. All right, so off to the charts. There we go, first try. You may notice something slightly different in my charts. I kind of rearranged it a little bit. I added this box over here on the right that I'm calling the gamma door zone. I used to call that the gamma scalp area, all right? But I'm going to call it gamma door, because a lot of people call it gamma wall or gamma corridor. I said, I don't like walls or corridors. I like doors, so I took a door. In any event, what I'm adding to the mix here is another trade, which is really not another trade. It's the gamma scalping trade that we talked about for a long time, playing where it comes into play when there's super low volatility. So we've added that to the mix of trades. There's a new playbook out there. There's a new trader's manual, etc. It's a situational trade, but it's well defined, and it is an asymmetric trade, something that you generally take later in the afternoon if under certain conditions. So that's been added to the mix of campaigns that we have. But our primary one for every day is 0DTE. I'll be taking a trade today. My campaign going forward is to take 3 0DTE trades a week, Monday, Wednesday, and Friday. Do a convexity stack trade or a convex stack trade, which is a 1 to 3 DTE, and that will be Tuesdays and Thursdays. And then a Sigma Drift campaign, which is 5 to 10 days out. And I'll be doing those once a week, typically on Wednesdays. But, I'll mix it up a little bit, looking at macro events and seeing whether or not they can shift. And then there will be 2 floater trades every month. So that'll be a total of 6 to 7 trades every week that I publish to my user base. And that would include my coaching service as well as the Skool communities. If you're interested in the Skool community and fat tail trading, go to the link below, skool.com/fattail. All right. And you'll get all the information on all of these trades. Plus, you get our artificial intelligence coach, our AI coach, that we call Vexy. Well, I call Vexy. Actually, the name of it is Convexity. Appropriately named. I was going to say, I was trying to say apropos, but I was trying to put an adjective onto it, and I was thinking, that doesn't work, Ernie. Anyways, as you can see, the VIX has hardly changed. On Friday, it was around 20 and change. I don't know, 20.5 or something like that. This morning, it's at 21.5. Considering what has happened over the weekend, you would think that it would be some sort of existential event and everyone would be, in panic and the news would be going crazy. But apparently, they just shrugged. Oil has hardly changed. Let's see, where is oil? Well, you can say over the day, this is oil futures this morning. It was up, but now it's coming down. So this is actually what we would call a black candle. And that's a very bearish signal. So I expect oil to now come down. Unless the Iranians decide to put a blockade on the Straits of, is it the Straits of Hormuz? So we'll see what happens there. But this is sort of showing the tension that is building up. And now we're kind of a little blow off steam, but then an exhale. That's how I would view that. So oil has hardly changed at all. The VIX is basically unchanged. Tesla had a big event yesterday. They had their robotaxi, but it was kind of a non-event. I mean, it was interesting to see the very first rides that happened and a lot of the YouTubers streaming those rides. It was uneventful because it's a solid technology. What most investors on Wall Street don't realize is that, see, a lot of them are banking that, they're going to have competition with Waymo, right? Because Waymo, they've got so many more rides and experience and so forth. But the reality is Waymo only has, 2,000, 3,000 automobiles, and they can't really produce more than 1,000 a year, where Tesla, they can literally produce 5,000 in a single day. So, and every single Tesla out there is capable of full self-driving. It's just a software update. So what's going to happen is that you're going to see adoption in, it's going to expand in Austin. Then they're going to move to the next city, then the next, then the next. And then in a flip of a button, then you have literally tens of thousands or even millions of cars out there capable of full self-driving and ride sharing. And then Waymo and all those others, they simply won't be able to compete. I mean, their prices are already more than Uber and Lyft. And when Tesla comes on the scenes, they're going to undercut their price by a huge amount. They'll have way better service, way better ride. I mean, that's for sure. And so there's a trade. There's an asymmetric trade for you. Is Waymo on the? Do they have a stock? I don't know. I have no idea. But if I were you, and I would say that short Waymo, big time. All right, that's a peer trade right there. Short Waymo and long Tesla. Although I'm just long Tesla anyways, and not just for rideshare. I think that that's going to be a significant portion of their business over the coming year, but nothing compared to what's coming down the pipe. All right, so back to the VIX. We're going 25 to 35 wide. I have not looked at the big ass fly this morning. I do know that there is a economic report. Let's see, economic reports. What is on for today? Let's see. We have FOMC member Daly speaking. That was yesterday. Waller's going to speak today. Bowman, Goolsby, Kugler, Williams, all today. Wow. And then Chair Powell will be testifying in front of Congress tomorrow, starting at 10 a.m. So that's the biggie. So I would imagine that the big ass fly is probably in play, and it's likely to drop in its debit price. I didn't look at it, but let's assume that it is. So anyways, I think wider is better this morning. So 30 wide, 35 wide is probably in play here. The market, it's still trending up, I have to say. It looks like we're about to go from a death cross to a... Let me just fix that, right? They call this right here a golden cross, right? And that's going to happen. No stopping that. Golden cross coming. Directional bias is still up. I would say that it's, kind of like that. Let's take a look at the market structure. So we're inside this node here. I'm looking for a pullback into one of these levels. You can see here's what happened overnight when the futures opened up on Sunday after the Iran bombing. They opened up down, but then they just quickly recovered. And now we're literally above Friday's close, or near. We went well above Friday's close, and it looks like we're probably going to open up above Friday's close. And then the market, the volume profile, you can see here, Stairway to Heaven, 1, 2, 3. This is Stairway 2. We're right at the bottom entering this node. This node is starting to gain some prominence. I think that once we break out of this node, step number 3 to Stairway to Heaven, it's just a straight shoot up. These two nodes here will provide little resistance, especially considering this large volume well here, where there's much lower liquidity. Once we break out, that's assuming that we don't, roll over and there's some other kind of big event. Maybe something will come out of this Iran deal and cause us to go down. But I think once the market accepts that there's really nothing there, and everything will be contained, the market will sort of have a sigh of relief and just take off. All right, that's my view. But in the meantime, it could take off. It could move down. I think both of those are big possibilities. This is the time to start buying those big move tickets, right? Because they're cheap right now. All right, back to the big head. So that's about it. That's how I see things playing out this morning. Let me just see if I can get all this in play here. All right. Well, anyways, thank you very much for joining me this morning. This should be a pretty good week for trading. Volatility is up a little bit. We're still thankfully in the Goldilocks zone. There has been a lot of... The market has been punctuated over the last few days as most of the moves happening overnight and then these just tiny doji days, which is kind of counterproductive from a trader's point of view because you're not getting that movement during the day. And so you are better off with overnight trades. But if you're going to do overnight trades, lots of people don't like to carry overnight risk. If you trade the fat tail way, the way we trade, there's never really any big risk because we're taking such small positions. So again, join the link, join our community down below, join the Skool community, fat tail. You'll really enjoy it. And that's about it. Thank you all very much. This is Coach.